stablecoin itself, it's like, okay, great. You know, you can program the rails. It's easy, cross-border. But then, there's not a lot of mainstream institutions, businesses, stores, whatever, that can accept stablecoin. So you have to do that last mile conversion. And I think that's probably where the biggest friction and cost comes in when we're talking about stablecoins. How do you guys think about that aspect?
Well, we just view it as another form of foreign exchange, and there's cost to do the transaction, and those costs have to be borne by somebody, right? It's not free to change things from dollars to stablecoins. It just isn't, right? And if you want credit to get it, instantaneous from any coin to fiat, that's a credit product now, and now there's extra paperwork around that, So we're generally, agnostic to it. Like we want to, like Marwan said, like we want to be able to process any way that our clients want to process. But we also want to be transparent that, a lot of people think, oh, I'm using stable coins and I don't have to do AML. And it's like, that's not the case, right?
Mm-hmm.
There's cost, when you get a bank involved, they have to check both parties, period. Right? So if you think you can do that for free, that's a mistake, right? And I think as more and more vendors and more companies are willing to accept stable coins, some of that friction will be alleviated. But whenever there's a fiat change, there's gonna be cost and delay based on that, right? So like, looking at your poll here, 66% are sick of regulatory delays. Stablecoin doesn't fix that, unless it's between two known parties and it's a repeat transaction over multiple times. But even then, they still have to check, right? So that might streamline a payment just like a repeat payment in fiat does today. But the reality is that's not going away with crypto, and it's not going away with stablecoins if you want to interact with the normal banking system.
Yeah, I think that's a really good point, because it's so important to ensure we're not fostering money laundering when we're dealing with digital currencies, which I think is one of the favored use cases, like the gaming industry, money laundering, right? That's a challenge. So, I mean, that's one of the nice things about the Genius Act, I guess, is because it's going to put regulatory oversight. It'll ensure that there's assets behind the stablecoin itself. So they'll have high quality liquid assets. It's going to make sure that no, you got a perspective on that. It's going to have, the AML KYC regulations applied to the stablecoins, ensuring that they follow the same rules that the regular financial institutions follow today, and put other consumer protections in place. So I don't know. Tell me, what was that?
Look, FTX had auditors that said they had high quality assets behind their coins, right? And they didn't. So who's proving it? I think, and even banks, right? Like Silicon Valley Bank couldn't survive a bank run. They had the assets, but because of just the changes in interest rates, they couldn't do it, right? So I think we are setting up for some epic blowups, right? And it's part of the learning process, and it's part of the deal. But like, just as speaking to some of the use cases, yeah, if I'm in a country with double-digit inflation and hardcore currency controls and a central bank that's terrible, yes, holding a stable coin is probably better than holding your local currency. And we see the case where, they accept stable coin and they only exchange out a little bit at a time as they need it into fiat, right? And to me, that's a great use case, because you're getting around a terrible solution. But if you're, CVS in the United States and you just happen to be sitting on 100 million, stable dollars worth of stable coins, and a bunch of influencers say, hey, that stable coin is not backed by real assets, and there's a run on that stable coin, yeah, they're not going to be able to liquidate all these assets in time. It's going to be like a bank run, right? So I think there's going to be it's counterparty risk, right? And so if you're trying to shift your counterparty risk from a bank to an unknown entity, I think most people are going to choose bank, ultimately at the end of the day. So I don't think it's bad to use stable coins. I think that they're important. They're going to be a rail. I think for people in a normal economy, it doesn't make sense to hold stable coins, right? It makes sense to convert it to your local currency or convert it into other assets that make sense for your specific case.